Gold. The shiny, magical stuff that's been a symbol of wealth for thousands of years. You've seen it in movies, heard about it from Grandpa, and maybe even dreamt about burying it in your backyard. But what does it really take to invest in gold? Stick around, and let's dive into everything you need to know about investing in gold, without turning into a pirate. First things first, why gold? Why not just stick with the stock market or bonds? Well, gold has been a symbol of wealth for thousands of years. It's shiny, precious, and when the world gets a little crazy, people flock to it like it's the only sensible thing left. Gold is like that reliable friend who's always calm, even when everyone else is freaking out. Stocks go up and down like a roller coaster, but gold just sits there looking pretty, and historically has kept its value, especially during times of economic uncertainty. There are several ways you can invest in gold, and luckily, you don't need to start a mining operation. Let's look at the main ways to invest in gold. Physical gold, bars, coins, and jewelry. The classic, tangible option. Gold ETFs, exchange-traded funds. Gold investments without the mess of actually holding the metal. Gold mining stocks. Investing in companies that mine gold. It's like owning a piece of the gold rush. Gold futures and options. For the adventurous and the brave, gold futures are contracts where you agree to buy or sell gold at a future date. Think of it as betting on the price of gold, but with a little more math and a lot more risk. Each of these has its pros and cons, so think of it like choosing your favorite ice cream flavor. Some people like their gold crunchy, gold coins, while others like it smooth and hassle-free, gold ETFs. So, why invest in gold? Well, here's the short list of reasons why gold is awesome. Hedge against inflation. Gold has historically kept its value, even when inflation makes everything else more expensive. Safe haven. During economic uncertainty. When the stock market's a roller coaster, gold is that nice, slow Ferris wheel that stays calm. Portfolio diversification. Gold is a great way to balance your investments and reduce risk. Gold is the Ferris wheel of investments, steady, reliable, and less likely to make you want to hurl your lunch. Now let's talk about the other side of the gold coin, the cons. Because as much as we love gold, it's not all sunshine and rainbows. No income. Gold doesn't pay dividends or interest, unlike stocks and bonds. It just sits there, looking pretty. Storage and insurance. Physical gold, while shiny, can be a pain to store and insure. Do you really want to hide a gold bar under your mattress? Price volatility. Gold might be stable compared to stocks, but it still has its ups and downs. Just like that unpredictable friend you're always trying to plan vacations with. Storing gold is like keeping a secret, except that secret is a heavy, shiny metal that could disappear if you don't store it properly. Now let's talk about how to get your hands on the good stuff. The first option is investing in physical gold, coins, bars, and jewelry. Gold coins are a popular choice because they're easy to buy, easy to sell, and fun to hold. Just remember, not all gold coins are created equal. Some might be collector's items, while others are just pure gold, so make sure you know what you're getting. Gold is a bit pricey, but if you've got the cash, buying coins or bars can be a solid investment. Just make sure to find a reputable dealer. There's a lot of gold out there, but not all of it is pure. You don't want to end up with a gold-plated paperweight instead of a shiny investment. Let's say you want gold, but you don't want to mess with storing or insuring physical bars. Enter gold ETFs. These are funds that track the price of gold, and they trade just like stocks. With gold ETFs, you can buy and sell gold without worrying about the weight, storage, or insurance costs. It's like owning gold without all the drama of dealing with it. Gold ETFs are the smooth, easygoing cousin of the physical gold bar. Less weight, less hassle, and no need to worry about burglars. Plus, you get the gold price exposure with all the comforts of 21st century technology. If you want to mix things up, you can also invest in gold mining stocks. These are companies that mine gold, and their stock prices tend to follow the price of gold. Gold mining stocks are like a golden ticket to the gold rush. But unlike physical gold or ETFs, mining stocks come with their own set of risks, like labor strikes, mining accidents, and, let's face it, everything that makes a good action movie plot. Now that you know how to invest in gold, how much should you buy? Well, a good rule of thumb is to allocate 5 to 10% of your portfolio to gold. Remember, gold is great for diversification, but you don't want your whole portfolio to be one giant gold bar. That would be a bit much, even for King Midas. So, whether you're looking for a safe haven, a shiny investment, or just want to feel like a pirate, gold can be a solid addition to your portfolio. Just remember, like any investment, it's all about balance and doing your homework. Thanks for watching. Be sure to subscribe for more tips on making your money work for you. Golden opportunities await.